Thank you very much, and I'll let the two of you take it away.
Some might wonder, what does the SEC have to do with crypto? And further, why, as Anya just pointed out, did an organization like the Aspen Security Forum ask me to speak at all about crypto's intersection with national security? Now, Nakamoto wrote, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. You see, at the core, Nakamoto was talking about some form of private money that didn't have central intermediaries. First was how to move something of value on the internet without a central intermediary. And that's where it can fit into national security. How to move something of value on the internet without a central intermediary. And relatedly, how to prevent what's called double spending of that valuable digital token. So subsequently, her innovation, or his innovation, spurred the development of crypto assets and what's called the underlying blockchain technology. I came to believe that though there was a lot of hype masquerading as reality in the crypto field, Nakamoto's innovation is real. And some in the public sector would say, well, no, almost like wishing it away. I really do think there's something real about the distributed ledger technology, moving value on the internet without a central intermediary. Further, it has been and could continue to be a catalyst for change in the fields of finance and money. We've had a long history since antiquity of private monies competing with public money. So this is not necessarily new, but it was new how it was done. Now, let me say, we already live in an age of digital public monies. The dollar, euro, sterling, yen, and yes, yuan, all are digital. And if you had any doubt about that, it's obvious during the pandemic. I mean, who is actually using paper or coinage money in these days? So such public fiat monies fulfill the three functions of monies. Monetary economists have studied this for a long time. Store of value, unit of account, medium of exchange. Why do I raise that? Because my opinion is no single crypto asset, though, broadly fulfills all of the functions of money. Bitcoin has some of it, but not broadly fulfilling all three. Primarily, crypto assets provide a digital, scarce vehicle for speculative investment. Thus, in a sense, one can say they are highly speculative stores of value. Buy Bitcoin, it goes up. Maybe I have something better for my future and my retirement. But it's not really being used as a unit of account. And we also haven't seen that crypto has been used much as a medium of exchange, except for one large exception. To the extent that it is being used as a medium of exchange, it's usually often to skirt our laws with respect to anti-money laundering, sanctions, tax collection on the dark web, and yes, also it's enabled extortion via ransomware, as we had seen recently in Colonial Pipeline and elsewhere. Now, as a policy matter, I'm technology neutral. I would say as a personal matter, I wouldn't have gone to MIT if I weren't interested in how technology can expand access to finance and contribute to economic growth. And I wouldn't have spent so much time around the digital currency initiative at MIT and my colleagues there if I didn't think there was something here that could be a catalyst for real change. But I am anything but public policy neutral. In my current role, as new technologies come along, we need to be sure that we're achieving our core public policy goals. And in finance, what's that about? Protecting investors and consumers, guarding against illicit activity, and ensuring financial stability. The SEC, well, we have a three-part mission for those who aren't familiar. Protecting investors, facilitating capital formation, and then in between, maintaining fair, orderly, and efficient markets. Investors, capital formation, and then the markets in between. We focus on financial stability as well as part of that fair, orderly, and efficient markets, but at our core, it's about investor protection. And if you want to invest in a digital, scarce, speculative store of value, that's fine. Good faith actors, by the way, since antiquity have been speculating on the value of gold and silver. So that's been around for thousands of years. Right now, though, in this digital, scarce, speculative asset, Bitcoin and others, we just don't have enough investor protection. And frankly, at this time, it's more like the Wild West than some sort of protection against fraud and manipulation in the space. those tokens being offered, many of them are offered and sold as security. My predecessor, SEC Chairman Jay Clayton, I think said it well in 2018 in congressional testimony. He said, to the extent that digital assets like, and I think he named Bitcoin, but he said, to the extent that digital assets like initial coin offerings or ICOs or securities, and then he goes, and I believe every ICO I have seen is a security, we have jurisdiction. Federal securities laws apply. I find myself agreeing with my predecessor, Chair Clayton. You see, generally, folks are buying these tokens in anticipation of profits. That's the core thing the Supreme Court said. And there's a small group of entrepreneurs and technologists standing up and nurturing the projects. Geez, anticipation of profits, small group of entrepreneurs standing up something. Our federal securities law says there's a need for some protection. And I believe we have crypto market now where many tokens may be unregistered without requiring the disclosures and the market oversight. There are also initiatives by a number of platforms, and I'm going to mention 3 types of platforms: trading platforms, lending platforms, and then there's a third type of platform called decentralized finance, which sometimes is doing one of the first 2 things. And there are many crypto tokens within these platforms priced off of the value of securities and operating in this space. I believe these platforms not only can implicate securities laws, but some platforms also can implicate commodities laws and the banking laws. Now, just thinking about a platform right now, many of them have 50, maybe 100 different cryptocurrencies, crypto tokens trading on them. And while each token's legal status depends on its own facts and circumstances, the probability is quite remote that with 50 plus tokens, that none of them are securities. It just sort of belies sort of the arithmetic that I've learned and how I learned to think about probabilities at MIT. Moreover, unlike other trading markets where investors go through a broker or some other intermediary to access, let's say, the New York Stock Exchange or London Stock Exchange or even the Shanghai Stock Exchange, people can trade crypto trading directly. They can do it 24 hours a day, 7 days a week, and from around the globe. And for those thinking about national security, this is very much a 7-day-a-week, 24/7 market, with Asia retail participating, with U.S. retail, Latin America, African, European. It's a truly worldwide market that some unregulated foreign exchange facilitate U.S. investors tapping in through virtual private networks. Paul, your paper just ran a story on this in the last week. The American public is buying, selling, and lending crypto on trading, lending, and these DeFi platforms. And there's significant gaps in the investor protection. Now, make no mistake, to the extent that there's securities on the platforms under our laws, the platforms have to register unless they meet some exemption. Make no mistake, if it's a lending platform, it's offering securities, it also falls within SEC jurisdiction. I anticipate there'll be filings with our agency with regard to exchange-traded funds. We have some already, but I anticipate we'll have some new ones under what's called the Investment Company Act. And when combined with other federal laws, the 40 Act provides significant investor protections. And given these important protections, I look forward to seeing what staff says about these filings coming forward related to these regulated Bitcoin futures trading on the Chicago Mercantile Exchange. Let me just say before I conclude, I'd like to note that we have taken and will continue to take our authorities as far as they can go. And certain rules related to crypto assets are well settled. For instance, the test to determine whether crypto asset is a security is clear. Now, some in the industry would say it's not clear enough, but I would say I agree with Jay Clayton. It's clear in this regard. There are some gaps in this space, though. I do think we need additional congressional authorities to prevent transactions, products, and platforms falling between regulatory cracks. I also think we need more resources. We could double or triple the number of people we have working on this at the SEC and still probably not fully cover this field. Thank you. I look forward to Paul's questions.